there's the custodian, right? And then there's the account, and then there's the product. We got hello from Oregon. Hello. I'm a state employee with a Voya TDF held at AIG.
Is that a target date fund?
Deferred. State employee. It's a tax deferred fund or tax deferred retirement account, TDF.
Yes.
I thought it was a target date fund.
Target date fund?
Yeah, there you go. Target date fund.
TDF. At Voya, held at AIG. Okay. I've learned from listening to your podcast that you don't know what TDF means.
It's true. Educate us. We don't like acronyms that much, and our listeners don't know what they mean either. So just spell them out.
Sometimes half the time it's like, oh, what are we doing here? I've learned from listening to your podcasts, such as yours, listening to podcasts such as yours, that investment in insurance products shouldn't be combined. And I agree with this thought. Until I retire, I don't have an option about where this account is held. I was wondering if because a state entity has selected this company, does that change whether it is better or worse to have my retirement account remain in this insurance company after retirement? I also have a retirement account at TIAA and Fidelity. So those would be my other choices for where to put this money upon retirement. It sounds like it's a 457 plan through the state, and they picked Voya to be the custodian.
Yeah, that
doesn't necessarily mean it's in an insurance product.
Right.
Big insurance companies have multiple products.
Yeah, that's right. It is an insurance company, but it may be just a regular investment.
Yeah. You can do whatever you want when you retire. I think basically if you want to consolidate, do that. Just know that TIAA is an insurance company too. So like, okay, I got my money at Voya, TIAA, and Mass Mutual. I want to put it
in something that's not insurance.
Then put it in Fidelity. It doesn't necessarily matter. They're all really good, strong companies. It's what investments that you're choosing inside your individual retirement account once you retire. So there's the custodian, right? And then there's the account, and then there's the product. So the custodian could be TD Ameritrade, Fidelity, Voya, Charles Schwab, Merrill Lynch, Mass Mutual, whatever. And then you pick the account. The account is, in your case, would be an IRA. And then from there, where you would want to look is, what are you going to fund the IRA with? Do you want to use an insurance product? So that would be like an annuity. Or you could use mutual funds. You could use ETFs. You could use individual stocks. I mean, then you could use CDs, bonds, whatever. The list goes on and on and on and on. So just because maybe there's an insurance wrapper associated with it, it doesn't necessarily mean it's an insurance product. Most cases, it probably is. Like with TIAA, the CREF is the mutual fund, and TIAA is the insurance, the annuity. So you just have to kind of educate yourself a little bit more of what you want to do. But I would suggest you consolidate to one company once you retire, so you have one retirement account that you can, take your distributions and live off of.
Yeah, and you have to realize when you're working for, in this case, the state, you are limited with your retirement accounts, what investments they have. After you retire, then you can move it wherever you want to, if you want to.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.